So, got a lot of screens back there. That is more than most people I know. But I love it. I love it because I am a technical analyst at heart. You know, I'm such a geek for all of this. And I know you're watching the new highs that we've been seeing in the S&P 500 and the NASDAQ. What are you watching now when it comes to some of these levels, whether it's support, resistance, the market recovery that we've seen since the March lows is incredible.
Well, good afternoon, everybody. And thank you, Nicole. Great seeing you. And my door is always open, so you can always come up and I can show you what I look at. Spent 8 years of my life building predictive analytics, so it's I love it. I've been doing this for 37 years. What we're looking at here and what's concerning to me is you're seeing a disconnect here. We're seeing tons of money being poured into the NASDAQ, the same names. It seems like everybody's writing the same names: Facebook, Amazon, Apple, Tesla, NVIDIA, Advanced Micro Device. Everybody's piling money into the tech sector. Looking at the bank sector and the airlines and the oil is really not participating much. But the big concern to me here is yesterday the S&P future, the cash made a new all-time high, and the NASDAQ made another all-time high. But what you're seeing here is the Russell 2000 lagging today and lagging from the all-time high. I think the IWM ETF was 171 and change, 171.50. We're at 157. So we're about $14 off the high there. If you're looking at the Dow Jones Industrial Average of the print high of 29,000, I think it was 551, we're about 1,800 points from the all-time high on the Dow. So a real big disconnect for me. I think there's a lot of complacency too. I think volatility, you can see the UVXYs, and then a symbol that we look at, and more or less it's been obviously down. Was trading like 19 and change yesterday, and there's really no volatility. And we're watching paint dry here. It's the typical summer doldrums in August. But I would be looking to take money off off the table at these levels here. I think again there is a significant form of complacency here.
Right. Okay, so let's put this into real parameters here. So you're saying to take some profits right now at this time. The complacency part is interesting because there are a lot of folks in some heavy volumes on the key names, right? The real growth names. And that's what everybody's doing. Everybody else, sell in May and go away, right? So you might see some pullbacks ahead. What will drive those pullbacks when, particularly for the NASDAQ?
Well, number one, we're probably at the sell in May go away. It really didn't work this year, right? So technically, probably one of the most overbought levels I've ever seen in the NASDAQ at these current levels. That's one. Two, anything can trigger the pullback, whether it's just technically overbought scenarios. When we were deeply oversold back in March, I was looking for a move to 24,000, and then obviously when the Fed came in, it propelled the market even more. But anything could really drive prices to lower levels, whether it's another spread of the coronavirus and getting worse, and we can see some things in the political spectrum unwind, or any trade tensions with China, or anything can really trigger it. And that's why I'm really fearful.
Well, let me jump in, because I know that you like some of the big names. I mean, you like Amazon and Microsoft and Facebook and Apple. Maybe today you think they're a little frothy or toppy, but are you suggesting on some sort of pullback, whether it's 2% or 5% or 10%, to maybe scoop up a few shares for the longer term?
When you see a monster bull market of that magnitude and that index, it's really, you're going to keep, on the next pullback, you'll look to create higher lows. So I'm not looking for new lows in the index or new lows in the stocks that we saw. I think the lows, I think by far, are in from the March lows. But when the NASDAQ hit about the 11,000 mark, and we got the pullback down to 10,250, 10,003, my target was about 9,800. It didn't get there, and then it snapped up about 900 points. So again, making higher lows, and that's what I think is going to happen going forward. We need to work off the significant overbought reading I'm getting on the weekly charts on the NASDAQ, and I think that should happen probably, it could happen in the next couple of months. Again, we do have an election in 90 plus days. So it's, it's very iffy as far as But if, again, these names are in monster bull trends, and I don't see any way that they're going to reverse these trends. I think these trends are here for at least going into the second quarter of 2021. And I think that these prices will continue to make higher lows going forward.
So is your asset allocation 50% equities, 50% cash, or when would you suggest that allocation should take place?
Well, it's still 50-50, but I'm saying to people, especially on Ticker Talker television and all the people who watch all day long, is that I think this is an opportune time to take money off the table. I've been in this game August 1st of this year, 37 years, and I've seen it all. And so I would look to just advise people to say, hey, you've had monster run-ups here in Amazon and all the names that we talked about. And it's healthy to get these pullbacks. And you can always, even though you may own them significantly lower, it doesn't mean that you can't, do an option strategy on it to protect the downside, or look to sell half or three-quarters of your holdings and then look to repurchase at lower levels. So I think that's the idea and the mindset going forward.